Man, oh man, I hope you guys are ready for the stock market this week because honestly, I don't even know if I'm ready. So if you're ready, I guess that's good enough for me. We have a lot going on this week from earnings to, everything going on with SVB, which could cause a ripple effect here in the financial markets. And we have a bunch going on with the Fed. Just a lot going on, guys. So in this video, we're going to break down a bunch. If you all find value, of course, hit the like button, make sure to subscribe, and don't forget to get up to 17 stocks from Moomoo. It's free money. All you got to do is use that link down below or go to stocksurfest.com/Moomoo. Once you open up an account, you get one free share of stock right off the bat. Deposit at least $100, you get another 6 free shares of stock. And if you deposit at least $1,000 onto the platform, you get another 10 stocks, totaling 17 stocks. Yes, so if you want some free money, you want to also help out the channel, use that link down below. And now let's dive into it. So right off the bat, guys, the stock market did not do well at all last week, especially on Friday. My goodness, guys, was Friday a bloodbath. We had the S&P 500 go down 1.4%. We had the Russell on Friday go down almost 3% as the NASDAQ and the Dow each went down over 1% as well. And you guys can see here the head and shoulders that we called out on SPY is clearly intact. You guys see that here. We have the left shoulder, the head, the right shoulder, and we have that same exact pattern playing out on Triple Q. Let me pull this up and show you guys. Triple Q, we have that head and shoulders playing out as well. And this, like I said, did not do well at all on Friday either after we got news that the FDIC is going to be seizing SVB, Silicon Valley Bank, after a lot of their depositors freaked out and thought that, and they're probably right, that SVB was not in a good capital position. And essentially that caused a bank run, right? Which we're not going to really dive too deep into in this video. I'm thinking about making a video on its own about that entire topic, which I'm sure you guys are being bombarded with content about that topic here on YouTube. So a lot's going on, guys. And on top of that, the SVB, the market's tanking, and, we have earnings coming up. On top of all of that, we have a lot of economic events that you need to pay attention to and that I'm paying attention to this upcoming week. On Tuesday, we get the CPI data for the month of February, which you guys know in January, CPI was at, I think it increased 0.5% on the month, and I think it came in at 6.4% annualized. So the month-over-month increase this time around is expected to be 0.4%, which is a little bit under what it was last time, right? And that is an annualized year-over-year, increase that is around 6%. So it was 6.4%. We're looking to see that come down to 6%. And then on Wednesday, it gets even better, guys. We have PPI. The PPI data is coming out, which is expected to be month over month roughly 0.4%. And we also get retail sales data on Wednesday, I think at 10 a.m. if I'm not mistaken, or maybe it's 8:30. I have to double check. Either way, we get retail sales data, which month over month is expected to decline by 0.3%, which I think last month it increased by 3%. So that's weakening in a major way, and we'll see how the markets end up reacting to that. So right now it's 5 o'clock when I'm filming this video. The futures are not open yet. They open up at 6 p.m. on the East Coast, right? So we'll see, and I'm expecting, let me know in the comments, guys, when you're watching this video what the futures are doing. I'm expecting that they're not going to be looking pretty. I think there's going to be a lot of more, A, volatility this week, and B, maybe even more downside. I think there's going to be more red this week considering what's going on with SVB and how much uncertainty that's pushing into the markets, the financial markets. It's going to be a wild week in my personal opinion, guys. And if I had to guess, I'm thinking Triple Q is going to take out the lows here from earlier in March, which we're right about at 288, 290. We're pretty much right there right now. We're probably going to break that and start to form that right shoulder on Triple Q here on the 4-hour chart. And SPY is already well on its way to, having that right shoulder play out. We're well under the lows. Unlike Triple Q, we're well under the lows from earlier in March. You guys see that right here where we hit 392 roughly. Now we're at 387. This could bleed potentially all the way down to the lows from December, which were right about 375, 380 here on SPY. So this could end up getting even worse. And don't even get me started on the VIX, guys. What's going on with SVB? This could get the VIX back to 30, maybe even above 30 points. Right now, the VIX is at 2480. It's just another one or two big days away from it going back to 30. So for that reason, guys, right off the bat, I'm watching for this week SQQQ, which goes up whenever triple Q goes down. You guys know this is a 3x bear leveraged ETF. So let's say triple Q, going back to what I just talked about a second ago, let's say we do fall under the lows from earlier in March. We start getting that leg down, right? That's going to be a spot, an opportunity where, triple Q is going to dump probably maybe 1, 2, 3%. And at that point, we could end up trading SQQQ, which again goes up whenever triple Q goes down. So that's one of the, moves I'm looking to make this upcoming week. And UVXY is another one that we called out a couple of videos ago that's done very well. This went up 16% on Friday. This went up 83 cents. It closed a little bit over $6. And essentially, guys, this goes up a bunch when the VIX is going up, right? When there's volatility. And I think, again, there's going to be more volatility. I think there's more upside in store for the VIX, which could then end up leading this thing to go maybe $6.50, $7. Who the heck knows? Maybe it goes even higher than that. So there's a lot going on this week, guys. A ton to watch out for. And this is one of those weeks that, to be honest, it's going to be very difficult to trade in the stock market. It just is. There's a lot going on, a lot of volatility expected. And for me, guys, and the way I'm looking at it, the way I'm approaching this is I'm going to be very nimble this week. I'm going to be very in and out, with trades I make. I'm not looking to hold overnight. I'm not looking to hold for a couple days because anything could happen. We have, again, a bunch of data coming out. SVB scenario is unfolding. A lot could happen. So for that reason, in and out, boom, boom type of trades, that's what I'm looking to do this week. Let me know your thoughts, as always, guys, in the comments down below. What do you think about everything that's going on? At least inflation is going to be coming down. At least that's what the projection is, again, from 6.4 to 6%. Hopefully it comes down even more than that. Let me know your thoughts, again, down below in the comments. So as for earnings this week, we have a lot of companies reporting earnings, guys, and the first one that I'm looking at, probably the one that I'm looking at the closest, is Adobe, ticker symbol ADBE, which is one of those stocks that I haven't bought, but I want to own it. This and Costco, those are two companies that I really want to own in my long-term portfolio. I just haven't been able to get them at the right price. Like I always say, guys, and like you hear from other people out there, price is what you pay, value is what you get. So Adobe right now, it's not the worst value. It's not like it's screaming overvalued, but it's not at a deal in my opinion. And for it to be at a deal, it's got to be under $300, which who knows? Maybe if they bomb earnings on the 15th, which is what day is that? That's on Wednesday. If they bomb earnings on Wednesday, maybe this thing does come under $300. Maybe I do get that opportunity. But time will tell, guys. Time will tell. As of now, we do have a bit of a wedge here. You guys see that on the 4-hour. We have higher lows, but at the same time, lower highs are being made. You guys probably, can notice that right here. So let's see. It all comes down to direction. We have, again, earnings on Wednesday, the 15th. They're looking to do EPS of $3.68 on revenue of $4.62 billion, which would be up about 8.5% year over year, which that's pretty respectable. Not too bad there for Adobe. So I'm going to set a couple alerts here. I'm going to put one at $320. Let me do that now. Mark is at or below because that is right by the lows from the end of February. You guys see that right here. End of February, early March, we hit about 320, then we rallied. So if that is able to break, we also break the uptrend, we're probably going to get a nasty leg down on Adobe. And again, that's where I'll probably be able to pick up some shares finally after just waiting for a long time. And that's the thing, guys. Patience is key when it comes down, especially to long-term investing. You got to be patient, have price targets, and stick to those price targets, which for me, it's got to go under $300. That's just the bottom line. That's just my opinion here on Adobe. It's a great company, but the price is just not where it needs to be yet, in my opinion. We also have Five Below on this Wednesday coming up on the 15th. They're looking to do EPS. Let me see this and pull it up on the chart here, guys. They're looking to do EPS of $3.06 on revenue of $1.11 billion, which would be up 11% year over year. Not too bad. And you guys can see here, oh my God, look at this. Five Below stock has done extraordinarily well over the past couple of months, from $110 back in July. Now it's all the way at $190, and it's in the middle of March right now when I'm making this video. That's very good, and it's pulled back a little bit in the past couple of weeks, as you guys can see, from 212 down to about 195. You guys see that? It's an 8% pullback, and the uptrend's still holding. So let's see if buyers do come in maybe here at about 185, 190, 195. That could be a point where we maybe get a short-term bounce, a relief rally, maybe, just maybe, guys. So 5 below, watching it very closely as long as it holds the trend, which right now it is holding the trend. The next stock here is Dollar General, ticker symbol DG. That's not a hard one to remember, right, guys? Dollar General is reporting this week as well. Let me see here. On the 16th, that's on Thursday, the day after Adobe and 5 below, they're looking to do $2.96 in earnings per share on revenue of just over $10.2 billion, which would be up a nice 18.4% year over year. Not too bad there for expected revenue growth on Dollar General. And just know, guys, just realize all these numbers we're talking about today in this video, they're all estimates. Who knows what they're actually going to report? They're just estimates, so keep that in mind. And looking at the chart, this does not look that good. Remember, 5 below looks pretty decent. Adobe looks decent. Dollar General does not look so great right here. It's down from $260. That was back in the beginning of November. Now it's at $217 a share. It is down almost 18%. It's almost in a bear market in the past couple of months. So this could bleed even more, maybe, if the earnings, if the numbers, if the guidance especially is not as good as expected. And let me actually pull back a little bit here. Let's see what the 3-year chart looks like. 3-year chart doesn't look that bad, actually. It looks like we are technically at a higher low right here at about 215. So let's see what happens right above the 180 SMA here on the 3-year 1-week chart, or the weekly chart. This could be a spot maybe where we get a bounce right at about 210. But like I said, if earnings are not that great, we could easily fall through 200, break that moving average here on the 3-year chart, and that's where we could get even more downside on Dollar General. So be mindful of that. It all comes down to these numbers. And we also have FedEx this week. Let me pull up FedEx. This thing is reporting on, let me see here. They're on Friday, right? Or Thursday. Either way, they're on the 16th. So that is on Thursday. That's right. So they're reporting, and look, the stock went down 3% on Friday almost. And right off the bat, the chart does not look that bad. In fact, the uptrend's holding. It looks pretty good in my opinion, right? We're down about, let's see, from 218 and now 201. The stock's down about 8%. It looks like we're holding right above the 180 SMA. We're holding the uptrend. What could go wrong here? Well, a lot could go wrong. A lot could go wrong, guys. You know, if they drop the ball on earnings, we break trend, that would not be good, obviously. But if we do get a bounce above, let's say, 195, 200, 205, maybe earnings aren't that bad, guidance isn't that bad, maybe we start to make a move back towards 215, 220, which again, you guys can see that's been resistance pretty much for a lot of this year so far, since the beginning of February up until, well, right now. So let's see what happens, guys. FedEx is looking to do $2.73 EPS on revenue of $22.75 billion, which would be down about 4% year over year. So don't expect anything wild, crazy coming out of FedEx's earnings because, well, at least their revenue, because like I said, it's looking to decline year over year. So watch out for it right here at about 195, 200. That's a very interesting spot on FedEx. We also have Xpeng reporting this week. They're on Friday, and this company is not looking to do well at all. They're looking to do revenue of $830 million, which is a lot of money, but that is down, get this, 30%. That's expected to be down 30% year over year. That's not good. Revenue, or rather EPS, they're looking to lose money, negative 35 cents EPS estimated, and this chart does not look good at all. This stock was at $35 back in June, almost 9 months ago. Yeah, 9 months ago. Now it's at $8. I mean, this thing is getting close to penny stock status, which anything under $5, the way I look at it, is a penny stock. So yeah, Xpeng not looking the best. They're on Friday, and the 3-year chart looks horrible. And the max chart, well, the max chart essentially is the 3-year chart because they IPO'd back in, or they came to market direct. I forget how they came to market. Either way, it's been trading for a little bit over, or right around 3 years. And the chart does not look good at all. The chart does not look good at all. And if they drop the ball, guys, this could be going to penny stock status fairly quickly. And another one that has not been doing well at all is ZIM Integrated Shipping, Zim Integrated Shipping, however you want to say it. This is a company, a stock that I actually warned you guys about months and months and months ago, maybe over a year ago at this point. I forget when I made my first Zim video, but let me tell you this, it was when the stock was well over what it is now, well higher in price, and they were doing very well, during the supply chain problems that we were seeing, right? The stock got all the way to 91 bucks. They were paying a hefty dividend. And I was telling you guys, I was warning you guys, look, the dividend now is juicy. It's looking good, but it's too good to be true. It's not going to last long. The company's probably going to collapse at some point. And lo and behold, here we are. The stock was at 90 bucks. Now it's at 20, under 20 bucks. And I checked the dividend, guys. The dividend's 125% dividend right now. So they're paying a larger dividend than the stock price, which is just insane. I think they're paying like a $25 dividend. So yeah, not a healthy company at all, but they are reporting earnings on Monday and they're looking to do EPS of $3.05. So they're still going to be profitable, but revenue has come down a lot. And of course, their profits have come down a lot as well. Revenue is looking to be $2.11 billion, which would be down almost 40 freaking percent year over year. What did I tell you guys? When the going was good, this was great. A lot of people were making money, getting dividend income. That's great. But now, when it's starting to turn, and it's been turning for months, for quarters at this point, this is not anything new, but since it's been turning, man, it's been very ugly. Again, revenue's coming down, earnings are down, the stock's getting destroyed, dividend, it's only a matter of time before they cut the dividend completely and the stock goes down probably under $10, which I think that's coming. So be mindful of that, guys, with Zim. They're on Monday. Keep your eyes out on it. For me, guys, I'm looking at it mostly as a trade. I would never invest in this thing, but as a short-term trade. Like I said, this week I'm being very nimble, getting in and out. So that's how I'm going to play it here on Zim Integrated Shipping Services. So that's pretty much it, guys, for earnings this week. Not the most exciting week, but what does make the week exciting is the fact that SVB, that whole situation is playing out. We get CPI, PPI, retail sales data. That's going to be some good stuff. But from the earnings side of things, not the most exciting. Well, I guess one thing that's exciting, guys, is the fact that we got news that Tesla, their CEO, which you guys may or may not have heard of, Elon Musk, he said he's open to the idea of actually buying Silicon Valley Bank, the distressed bank, which now it's been seized by the FDIC. And there's people that are looking to pay, 50 cents on the dollar, whatever, a very cheap amount for that bank. And do I think Elon's going to do it? Maybe. He might do it. I think it's a publicity stunt, to be honest. I don't think there's a reason for him to do it. But then again, I'm not Elon Musk. I don't know what he's thinking. I don't know what his future plans are, 10, 15 years from now, 5 years from now. I don't even know if he knows. I don't know, guys. But he's open to the idea now of buying SVB, which I feel like his attention's already split in 15 different directions. But he's going to, maybe he does it. Maybe he's going to hire his team to take care of it. And hopefully he finds a CEO for Twitter soon. I don't even know what's going on there. But listen, it's in the air. It's open. It's open. He's open to it. Like he said on Twitter, I think that was yesterday or the day before. Either way, that's going to be something worth watching, and I'm going to be watching how Tesla stock's going to react to it. So, yeah, needless to say, guys, we have a jam-packed week. I hope you're ready. If you enjoyed the video, hit the like button, subscribe. Don't forget to check out my Patreon if you want to be a part of the Discord community. If you want to see my charts throughout the day, if you want to see me build out my Patreon portfolio, which this week, guys, we're probably going to get more volatility. I'm going to be buying more stocks in that portfolio. Check out the Patreon down below. And don't you forget to get up to 17 stocks from Moomoo. Once you open up an account, you get 1 free share of stock. Deposit at least $100. You get 4 more free shares plus 2 free shares of either AI or BBAI. Those are stocks that you can get for free. And if you deposit at least $1,000, you get another 10 stocks, totaling 17 stocks from Moomoo. So use that link down below. Join the Patreon. Get your free stocks from Moomoo. And with that being said, I'll catch you guys later.